Hello and welcome. You're watching Business Today Television. I'm Sakshi Patra and this is our monetary policy coverage. Well, a very, very important policy decision might come in just 3 minutes from now at 10 a.m. We will see the new governor present his first policy decision. What is also being anticipated is whether an interest rate cut could happen a first time in the last 5 years. And that's why this policy really assumes even more importance. And it also comes right after the union budget as well. We'll be joined by top guests on the show to help us understand what the policy decisions could be and also post decoding of the policy announcements. We have Rishi Shah, partner and senior economist at Grant Thornton Bar, joining in. Hi, Rishi. Warm welcome. Good morning to you. Tell us, what's your consensus estimate? 25 basis points or nothing at all?
I think there is a cut in the offing right now because, if not now, then when? Because there seems to be one cut priced in. The government has done its job. So I think let's wait and watch, but at least one cut on the horizon right now.
One cut on the horizon right now. What do you expect as far as the stance is concerned? Do you think there will be an alteration as far as the neutral stance is concerned? That's been long awaited.
I think, the stance will be, I think it'll be neutral to lose on that side. It'll be supportive of growth as we move ahead, because I think that seems to be the main concern. The budget is also focused on that. So if monetary and fiscal policies both work towards that, I think the economy will do better in the coming year. So there will be some shift of stance, but again, they will talk about some caution given the fact that there are enough global uncertainties, and we're very unsure of what happens from the US side of things.
Yes, absolutely. Do you think that will find a mention? Trump tariffs could find a mention in the statement today?
Not maybe the tariffs, but the overall, stance that the Federal Reserve has taken, and what seems to be happening globally. I think some of that should be in focus when the RBI speaks.
With the latest pause coming in on the US Fed, is that going to be having any impact in the way the policy decision could be made? But they've already made 3 cuts. Or do you think that will have a more bearing as far as the decision today is concerned?
See, the fact of the matter is that the US economy seems to be doing quite well. They have picked up the GDP numbers, the employment numbers. So they, as of now, don't see a need to be cutting further. But like you said, that they have already gone in for 3 cuts since last, I'm guessing around September, October, when they started the cutting cycle. That gives us some room to do that. So I think that will be an important aspect for the RBI to monitor, but overall, still see around 25 to 50 basis points of cuts in this cycle. I think that's something that the economy can go with, and that will be beneficial.
Okay, cumulative up to 50 basis points. Got that. Let's look at Nilesh Jain joining in now, Head and Vice President of Technicals and Derivatives Research at Centrum Broking. Nilesh, big policy decision expected today as far as rates are concerned. What has the market priced in already?
Very good morning to you, Sakshi. So, looks like markets have priced in 25 basis cut. Looking at this sharp depreciation in the rupee we have seen recently, that is more sort of indicating that 25 basis cut seems to be on the card. And if we see any surprise with the status quo, that would be a kind of a negative for the market, and we may see a sharp decline. But as of now, it looks like more sort of a 25 basis cut.
All right, let's shift focus to the RBI now. RBI Governor Sanjay Malhotra's first speech underway. Let's listen in.
Is of course of interest to a large number of people from various walks of life. It impacts the lives of virtually all citizens of the country. The resolution also provides the rationale and the thought process of the MPC, and therefore is of relevance to businesses, economists, academicians, and the finance world. Apart from these MPC-related announcements, the governor's statement has become an important medium for the Reserve Bank to highlight its priorities on which it would like its regulated entities to focus their energies on. It is an opportunity to point out areas of concern and challenges for the stakeholders to address their attention to. It is an occasion for the Reserve Bank to articulate its views on critical areas of interest. I will continue with this practice of a detailed statement after each MPC committee meeting. Now, before I come to the resolution of the MPC, kindly allow me a moment to reflect on the experience of the flexible inflation targeting framework. You are all aware that this inflation framework was put in place in the year 2016 and it was reviewed in the year 2021. You are all also aware that this is a monumental change in the monetary policy history of our country. And so I thought it fit that I reflect on the experience of the flexible inflation targeting framework. Well, I believe that it has served the Indian economy very well over these years, including the very challenging period since the pandemic. The average inflation has been lower post the introduction of this framework. Moreover, CPI has mostly stayed aligned with the target given under this framework, barring a few occasions of breaching the upper tolerance band since its inception. We in the Reserve Bank and the Monetary Policy Committee will continue to improve the macroeconomic outcomes in the best interest of the economy, using the flexibility which is embedded in the framework, while responding to the evolving growth inflation dynamics. Moreover, we will strive to further refine the building blocks of this framework by making advances in the use of new data, improving nowcasting and forecasting of key macroeconomic variables. We forecast, you are aware, growth, inflation, etc., because this is actually a forward-looking policy. And so we'll continue to do that and develop more robust models. On the regulatory front, I would like to mention, and especially there has been a lot of media attention with regard to some of the proposed regulatory changes pertaining to liquidity coverage ratio, expected credit loss framework for provisioning by banks, the prudential norms governing projects under implementation. We will continue to strengthen, rationalize, and refine the prudential and conduct related framework. I think this is very important in the overall interest of our economy. The interest of the economy demands financial stability and consumer protection. Our mandate in the RBI is to enhance both of them. At the same time, I would like to emphasize that the economic interest also warrants increasing efficiency in the economy, and this too is our duty. We recognize that just like there are no free lunches, regulation to enhance stability and consumer protection too is not devoid of costs. There are trade-offs between stability and efficiency. We will keep this trade-off in mind while formulating each and every regulation. It will be our attempt to strike the right balance, keeping in view the benefits and costs of regulation. I also want to reassure all stakeholders that we will continue with the consultative process which the RBI has been doing over the years in this regulation making process. The suggestions of the stakeholders are very valuable, and we will continue to give serious consideration to them before taking any major decision. We will also ensure that the implementation of such regulations is smooth. We will give sufficient time for transition, and where regulations have major implications, the implementation will be done in a phased manner. Coming to the global economy, the global economic backdrop remains challenging. The global economy is growing below the historical average, even though high-frequency indicators suggest resilience, along with continued expansion in trade. Progress on global disinflation is stalling, hindered by services price inflation. With receding expectations on the size and pace of rate cuts in the US dollar has strengthened, bond yields have hardened, emerging market economies have witnessed large capital outflows, leading to sharp depreciation of their currencies and tightening of financial conditions. Divergent trajectories of monetary policy across advanced economies, lingering geopolitical tensions, and elevated trade and policy uncertainties have exacerbated financial market volatility. Such an uncertain global environment has posed difficult policy trade-offs for emerging market economies. The Indian economy, though continuing to remain strong and resilient, also did not remain immune to these global headwinds, with the Indian rupee coming under depreciation pressure, as you would have noticed in the recent months. At the Reserve Bank, I would like to assure all of you we have been employing all tools at our disposal to face the multi-pronged challenges. With this backdrop, let me now come to the Monetary Policy Committee resolution. As I mentioned, we met these last 3 days, concluding today. And after a detailed assessment of the evolving macroeconomic and financial developments and the economic outlook, as I mentioned, we are forward-looking, the MPC decided unanimously to reduce the policy rate by 25 basis points from 6.5% to 6.25%. I repeat, the MPC unanimously decided to reduce the policy rate by 25 basis points from 6.5% to 6.25%. Consequently, the standing deposit facility, SDF, the SDF rate shall be at 6.0%, and the marginal standing facility rate, also called the MCF rate, and the bank rate shall be 6.5%. The MPC also decided unanimously, again, to continue with the neutral stance and remain unambiguously focused on a durable alignment of inflation with the target while supporting growth. I shall now state the rationale for the decision in brief.
All right, so the interest rate cut has been delivered, the first monetary policy decision under the new governor, Mr. Sanjay Malhotra, has decided to cut the repo rate by 25 basis points, and it's now at 6.25%. And this has been unanimously discussed along with a neutral stance that continues on the policy as well. SDF stands at 6% and the MSF at 6.5%. First up, I'm coming to you, Rishi, for a quick take on the reduction. This is what you had expected. It's been delivered, and the market have also continued to do that spike. I'll come to Nilesh and Sunny for a reaction on the markets. It's been a spike right there, right as this decision has been delivered. Rishi.
Yeah, a good and positive step. I think this was expected, and they've highlighted all the concerns, which was given the market confidence on the fact that yes, there will be continuity. They are looking at all aspects, and a positive step in the rate cutting cycle. The stance remains neutral, which is just indicative of the risk of the times that we are sort of dealing in. So yeah, I mean overall a positive step, and let's go on from here.
Absolutely. Quickly coming to Nilesh for the first reaction. The markets went in with lower expectations, but finally the rate cut has been delivered, and there is this uptick on the Nifty and the Nifty Bank as well. What's your take? How are you looking at the market reaction?
Well, Sakshi, it's in line with the expectation that 25 basis point cut was very much expected, and markets have already discounted that thing. And now we are witnessing a sort of a positive reaction that is, again, a good sign. Now, we need to focus on sectors and stocks now. The NBFC, the financial banks are looking positive. We have seen a good momentum recently. Now, after this rate cut, there will be a further, sort of a uptick in realty space, in auto space. So these are the sectors to watch out for from a short-term point of view. we may see a positive move to continue. Now, some profit taking that cannot be ruled out, because Bank Nifty, if you see in last 4 sessions, it has jumped from 49,000 to 50,500. So out of, after a sharp run up, we may see some retracement of another 200 to 300 points. But these are good opportunities to accumulate quality banks and quality NBFCs.
Absolutely. Sunny, coming to you for a quick take on the first cut and the first reaction on as far as the RBI's decision is. This is the first cut in 5 years that we've seen on interest rates. Does it change the sentiment for the D Street? Remember, we had the union budget on 1st of February. That pushed consumption and boosted consumption by way of extending tax cuts and a tax bonanza. Of course, the effective new taxes will be starting April, but that was a fiscal policy push as far as the economy and the consumption is concerned. And we have another decision right after from the monetary policy as well to get probably focused on slowing growth and revive growth as well.
Yeah, good morning. Definitely, I think a big booster and big relief to the consumer who are basically relying on loan to drive their consumption. So basically, all the housing loan and EMI burden is likely to reduce immediately, maybe over the period of next 3 to 6 months. And as we proceed forward, I think at least we can ensure, at least we can expect that few more rate cuts can be seen over the period of next 9 to 12 months. And that will kickstart the economy. As you rightly pointed out, that during the budget, the stimulus of 1 trillion rupees coupled with this rate cut will definitely aid in consumption growth. And that augurs well for industries also, rate sensitive also. So overall, I think it's a positive and in line with expected numbers, in line with expected rate cut from RBI. I think the key beneficiary immediately are non-banking financial services company NBFCs. So they will definitely benefit in terms of low cost of funds. And I think recently the companies which have posted very good set of numbers like Bajaj Finance, PNB Housing, on housing finance side, this continue to look good.
Okay, NBFC's financials like Bajaj Finance, they continue to look good. Coming back to Rishi, I think the new flash is real GDP growth for FY25 is expected at 6.4%, and the MPC has noted that inflation has declined. How are you reading into these two key parameters now by way of how the economy is poised to move forward?
I think broadly in line with expectations, growth, as you rightly pointed out, the estimates have decreased. The uncertainty, with the geopolitical situation globally has also sort of increased over the last few months. Indian overall domestic growth next year itself is likely to remain flat around current levels. Along with that, I think if you look at a durable fall in inflation, nobody's very confident of that aspect. Food inflation continues to remain a concern. So, any kind of movement on rates will be data dependent, as I understand it. And given how the global scenario also evolves. Overall, yeah, you can expect maybe some more easing, but broadly, I think we're very, close to where the rate cutting cycle will be. So maybe a 6% on the repo is something that the RBI targets, given the fact that there is some stability in the international, economic sort of the geopolitics also stabilizes, and there is largely stable markets.
Okay, Rishi expects one more rate cut of 25 basis points that could bring down the repo at 6%, and probably that is what the RBI is looking at this current stage in time. But a first cut has been delivered in the last 5 years, and 6.25% is the new repo right there. I'll come to you, Rishi, but let's quickly get to Nilesh to understand any key stocks that he spotted in the interim, which have immediately started to react post this rate cut. Any stocks that have come onto your radar, Nilesh?
Right, Sakshi. So, large cap banks, heavyweight like HDFC Bank, which is still showing strength, and we have seen a good rebound in this particular counter. So, I think this particular stock can be added in the portfolio for upside target of 1800 plus. So, these are short to medium term, upside that can be seen in HDFC Bank. Buy should be advised on declines. Keep a stop loss below 1720, but these are good levels to accumulate this particular stock. And apart from that, a couple of metals have shown some strength today. So watch out for JSW Steel. That is looking positive for 980 to 990 kind of target on the upside with a stop loss below 940. This particular counter can also be bought. Another beneficiary would be kind of a realty stocks, but that have not shown any sort of momentum yet. But I think these are the good levels to start accumulating counters like DLF, Godrej Properties, and Oberoi Realty. These are good stocks to start accumulating.
Fair point. Sunny, to you. Beyond the financials and the banks, what else is looking good to you? Other rate sensitive pockets, what's ticking higher?
I think even select auto companies look good from a medium to long term perspective. So today, Mahindra and Mahindra will report their quarterly numbers, but despite of that, we have seen a month-on-month volume delivery. I mean, a kind of outlier number as far as passenger vehicle is concerned. Tractor also continue to do well. So Mahindra and Mahindra is the one stock which is on our radar. Among the two-wheeler space, TVS Motor and Eicher Motor. So Eicher, we have seen a revival in volume growth after a long period of time. Anyway, the stock is trading at a lifetime high. So Eicher Motor and TVS Motors are on our radar. In addition to that, auto ends companies, the few auto ends companies catering to all these OEM, Lumax Auto, Minda. So these are the few companies which are on our radar from an auto sector. But again, I think housing finance is the one sector which
I'll come to you, Sunny. I'll come to you for the housing finance. These are the auto names that one should definitely look at. But Rishi, very quickly, the other flash is FY25 CPI inflation forecast has been retained at 4.8%. Has it come as per your expectation too? What is your own take as far as inflationary trends are concerned?
I think broadly, they're talking about stability in the inflation front. I don't think we've really gotten handle of the where inflation should move towards. It will remain volatile. We still have a lot of institutional factors which continue to affect inflation. Overall, in the band of 4 to 6%, the positive thing is that you're below the halfway mark. So you're closer to the 4% rather than to the 6%, which can, determine the RBI stance. And, given again, this expectation of where inflation will be, I think some kind of, more easing can be expected. But overall, it's in line. I think on the inflation front, there is more stuff that needs to be done from the fiscal side rather than the monetary side to contain the expectations and, how on a long-term basis inflation moves.
Okay. Remember, April to June GDP growth forecast has also been cut from 6.9% earlier to 6.7% now. So moderating growth is what we are actually looking at this point in time. But Rishi, neutral stance. Do you think what do you make of that continuation at this point in time? Do you think that will probably be changed in the April policy? What exactly does the neutral stance continuation mean at this point?
I think, the neutrality comes from the fact that the RBI is even keeled on, what needs to be done going forward. The neutrality will also come from the fact that they are uncertain of how the global economy behaves in the next 2 to 3 months. Yes, there are downward pressures on the Indian economy. That being said, they need to be careful about how the Fed behaves, how the other major central banks across the world behave. And that's why that neutrality is required for currency stability, to ensure that there is that arbitrage between the Indian rates and the Western rates, wherein, you continue to attract money into the fixed income space along with the equity space, which is more, likely to react to the growth pulses in the economy. So I think the neutrality comes from there. The economy clearly needs a push right now. And with these two measures, with, starting 1st April, I think more money into the hands of the consumers and slightly lower rates, which have a bigger impact on the homeowners or, people who have housing loans. I think all of that is going to help the economy grow. But I think April, more or less, you're going to look at some amount of stability in terms of rates. I'm not unlikely to get another cut then, but maybe in the next one, you're likely to get one more.
Got it. Sunny, coming to you, you were talking about the housing finance companies where you believe a trickle-down impact could be seen. Which are those top stocks that you're looking at and where the benefit could come in, of course, with probably a boost to the real estate and the housing demand? Housing finance companies could clearly be in focus.
So PNB housing will be our top pick in housing finance sector. So we have seen a very good set of numbers during this quarter. At the same time, the kind of shift which is happening toward the affordable housing, I think the yields are or NIMs are likely to be maintained. Sorry, going forward. So I think the fair value of the business is close to 1150 to 1200 rupees if somebody is a long-term investor. And just to add that, I think because of this rate cut, PSU banks are a clear-cut beneficiary in a short to medium term. So, and at the same time, all the PSU banks are trading at a very reasonable valuation. So we may see some momentum or kind of uptick as far as PSU banks like Bank of Baroda, Canara Bank, and Indian Bank is concerned.
Okay. Volatile trade as far as markets are concerned, 119 points lower for the Nifty Bank right now. Rightly, you pointed out, Nilesh, that we could see some profit taking, and already it's showing us some signs. Your sense of how should one read the current space in the Nifty Bank?
See, Nifty Bank, as just pointed out, we have seen a good rally ahead of the policy of close to more than 1,000 points. From the levels of 49,000, it has jumped to 50,500. It's almost 1,500 point move that we have already seen. So some retracement towards 50,000 that seems likely, and we still have another 200 point move on the lower side in the Bank Nifty. Now, 200-day exponential moving average for the Bank Nifty, which is currently placed at 50,200. So, from today's closing perspective, I think it is important for the Bank Nifty to close above 50,200. That will be considered as a good weekly close. And post then we may see a follow-up move on the upside in the coming week. As of now, let's better wait and watch for sustainability of this particular move. And if it settles above 50,200 for next half an hour, then it will be a positive sign. And the focus should be on private sector bank, heavyweights, counters like HDFC Bank, ICICI Bank, and within PSU banks, Can Bank, BOP, SBI. These are the few names that can be accumulated on decline. So let's wait for some more time. Let's the dust to settle down. And if at all we see Bank Nifty towards 50,000, then probably it can be bought with a stop loss below 49,650. And we are expecting a pullback in the near term, in the coming week mostly.
Fair point. Rishi, coming back to you, when it comes to the expectation on GDP, again, the RBI policy has indicated FY25 GDP retained at 6.6%, and they've also retained 4.8% of CPI inflation expectation for FY25. For FY26, real GDP growth is projected at 6.7% as well. And that's as far as some of the expectations on the GDP and the inflation forecasting is concerned. No change right there on both the accounts. Is that as per your expectation? Do you think this could be further, under risk on a lower band as far as growth is concerned?
I think it's a little early to be talking about, the next year's forecast and, how close are we likely to get. The government has estimated somewhere in the vicinity of 6.3, 6.4 to 6.8, 6.9%. The RBI is bang in the middle of it. I think it's from a point estimate, I think we're going to be around that number, barring any major upheavals in the economy. You're going to see in the coming quarters, from the third quarter of the current fiscal year going on, the number is going to move up. We're not going to get sub 6% growth figures. But having said that, it's unlikely that you move above the 7% mark in a hurry, right? Like I said, that there is just too much of uncertainty. It's a wait and watch approach. You can see these numbers go up, but let's see how the consumption boost that the government has given in the budget, how that moves ahead by the second half of next year is somewhat when you'd really like to get where we are reaching on the full year number. As of now, I think it's a fair assessment. Our own numbers was closer to 6.5% for next year, and that's what we are going to stick to.
Okay. Real GDP for Q1 of FY26 projection has been revised to 6.7% versus 6.9% earlier. So that's as far as Q1 FY26 projection for GDP is concerned, real. Q2 again has also been revised. Q2 FY26 real GDP has been now projected at 7% versus 7.3% earlier as well. So the first quarters of the next fiscal year have also seen some revision. Real GDP for Q3 is now projected at 6.5%. So that's another one that we should be really looking at as to quarterly. How are the expectations that the MPC is now pointing out as far as growth is concerned? Well, of course, okay, there are some other statements coming in that the governor is saying two-factor authentication to international online payments will continue. They're going to be extending that. Those are some other statements apart from the main decisions that have been announced too. Coming back to you, Sunny, you've talked about auto space, you've talked about housing finance companies, the NBFC financials as well. Tell me, how are you looking at the consumption-oriented names, FMCG names? How are you looking at those?
Again, Sakshi, within FMCG, a few companies have reported a very good set of numbers. So if you look at Britannia, clear-cut beat as far as street expectation is concerned, 6% volume growth. So I think, yes, so earlier the concern was on rural growth. Now rural is doing well, but urban is under pressure. So I think the companies which are focused on kind of rural market continue to look attractive. But again, one has to keep in mind that markets are choppy, and when I say attractive, obviously the investment horizon has to be slightly longer. And ultimately, the strategy over here should be that one should gradually deploy money, because post this RBI event, I don't see any positive event as far as domestic market is concerned. And the kind of supply pressure which we are seeing from foreign institutional investor, that is leading to a lot of pressure on the across the board, whether the companies have reported good set of number or not. So again, I think the strategy in a current uncertain environment is to gradually deploy capital over the period of next 2-3 months, with an expectation that when we start hearing commentary in the month of April and May for the March quarter number, at least there is some optimism of double-digit earning growth for FY26, and that will lead to a stage where market may find some stability and start moving up.
Okay. FY26 CPI inflation is now seen at 4.2%. That's another flash that's come in. FY26 CPI inflation now seen at 4.2% by the RBI at this point in time. Nilesh, very quickly, market slipping further, now below 23,500. How do you see this 100-point cut now?
See, Sakshi, it's a kind of profit booking that was very much in line with the expectation, because usually you see after such run up, after sharp run up, it is followed by a profit taking. Now we need to see whether whether Nifty specifically, if it hold on to it 23,500 mark, because there's this strike on derivative front where we have seen a lot of put writing in last 2-3 sessions. So put writers are very much active at 23,500. I'm getting a sense that today we are likely to see a close above 23,500. If at all we see a fall below this level, that can be a good opportunity to go long in the Nifty index on declines, keeping a stop loss below 23,400. And we may see a rebound from here somewhere around 23,600 to 23,650 on the upside can be seen. So it is better to focus on stocks and sector specific move. A couple of stocks that are on my radar. Apollo Tyre is one particular counter where we are witnessing a strong rebound. So we can expect a follow-up move towards 430, 435 that can be bought with the stop loss below 418. Apart from that, if you see within housing space, that particular space, Aadhar Housing Finance is something that is looking at current level looking attractive. For upside move to continue towards 420, 430 with a stop loss below 400, this particular counter can also be bought.
Okay, we'll go across to Rishi now for summing up the entire policy as well as what it means for the economy and the markets at large. Rishi, to you, liquidity, RBI governor says, is tight due to forex ops and currency in circulation rise too. I think no decision as far as CRR further cut has been announced, or any other liquidity measures. They were already announced before the policy ahead of that as well. Your suggestion of whether liquidity is something that will continue to see monitoring, or are we comfortable now?
No, I think broadly you're going to see some kind of easing in the liquidity conditions in the coming months. It will be slightly easier from that perspective. But largely to sum up, how the policy is to be seen, I think one of the most important comments that the new RBI governor made was the fact that there was unanimity in deciding for a cutting of the rates. I think the last time also there was, some imbalance there with most of the members opting for, stability and not actually going in for a cut. I think that has actually tells you what is the mindset of the RBI right now, wherein they are looking to support growth more aggressively than what they were earlier. So while the RBI continues to be mindful of, how the global situation evolves, I think that the focus now clearly for the next 6 months is to drive up the economic momentum in the economy and ensure that growth numbers actually move beyond to, closer to your potential rate of growth, which is estimated at around 7%.
All right. Well, thank you so much, Rishi. Thank you so much, Nilesh and Sunny, for being with us, for decoding the policy decision. We will get the fine print, and of course, the RBI governor will be doing that press conference a little later. And post that, we will also decode with a whole host of panelists, economists at large, to decode the fine print for us as far as the policy decisions are concerned. But many thanks. Markets have slipped 0.3% lower, 23,533. Key highlights from the policy. The biggest one is the repo rate cut that's finally been delivered, 25 basis points to 6.25%. Finally, the first time after 5 years of keeping rates steady that we have already seen. On CPI inflation, FY26, the expectation is 4.2% now. Q1 FY26, there's a revision downwards to 4.5%. Q2 FY26, there is a 4% steady expectation. Q3 at 3.8%, and Q4 FY26 expectation at 4.2% right now. As far as the CPI inflation is concerned, for FY25, the CPI forecast has been retained at 4.8%. That's the other biggest highlight that we have got. There is a unanimous voting, just like how Rishi pointed out, for the rate cut decision that's been delivered, and the neutral stance that has continued to be presented in right now from the RBI policy. With that, viewers, we wrap up this special conversation around the RBI policy, but do stay tuned throughout the course of the day. Market reaction, market trends, and of course, post the RBI policy, how are experts, economists really looking at what happens to the economy and the markets. So stay tuned throughout the course of the day. The coverage will continue.
The MPC unanimously decided to reduce the policy rate by 25 basis points from 6.5% to 6.25%. Consequently, the standing deposit facility, SDF, the SDF rate shall be at 6.0%, and the marginal standing facility rate, also called the MCF rate, and the bank rate shall be 6.5%. The MPC also decided unanimously, again, to continue with the neutral stance.
Karnataka is India's ultimate startup destination with over 14,000 registered startups and 45 unicorns. Bangalore, proudly known as the nation's startup capital, ranks third globally in the number of startups, cementing its place as a powerhouse of innovation. The city also has 144 incubators and accelerators and 1,500 plus VC funds. Karnataka's success is further driven by strong industry-government collaboration, a bold entrepreneurial spirit, and cutting-edge R&D hubs of global giants. As we approach our global investors meet, I eagerly look forward to recognizing and rewarding the startups shortlisted through Venturize, our international startup challenge. Venturize is set to boost startup ecosystem and drive innovation and entrepreneurship across the country. Join us as we accelerate growth and shape the future through Invest Karnataka 25.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, and our focus will be on PVR INOX Q3 earnings. The company has posted a net profit surge of 177% to 36 crores in Q3. What we've also seen is that the firm's revenue has come in at 1,717 crores, up 11% from the last year's period as well. Even when we look at operationally, there is a growth of 12% at 527 odd crores when it comes to the EBITDA figures right there. We also have with us the top management